is February 24th, Tuesday. Hope you're doing well. We've got a lot to touch on today. I really want to start, Tom, talking a little bit about the big article that we saw yesterday from Citrini Research. I don't know if it was written by AI. There definitely was an error in it. They said Discover Financial could really get hit on all of the credit card disintermediation. Well, Discover Financial no longer exists as its own separate stock.
Yeah, it's a subsidiary of Capital One.
So, but it really did move markets yesterday. So essentially what this report did, I think it was, someone was saying it was 20,000 words. I don't think it was that long, but it was lengthy. And essentially what it did is it said, okay, here we are we're assuming we're in June 2028, and AI has really exacted the imposition on a lot of historical businesses that people are concerned about. What does that look like? They say unemployment might be 10%, GDP growth had done well, S&P 500 topped out at 8,000 in October 2026, but had since corrected 40 to 50%. So that was the narrative that they painted. And they said, okay, what would this look like in terms of the companies that get hit? And they called out software companies, which we've all seen. They talked about frictional consumer companies. So think your memberships or your subscriptions or your companies that have teaser rates that now an AI agent can go and negotiate. Basically, they're just capitalizing on your own laziness for not canceling a subscription or calling up Comcast. They talked about credit cards, how people would just be paying with stable coins, private credit. Really hit India pretty hard because they're a big IT outsourcing area, which I thought was interesting. I hadn't seen that framed like that, and I thought it was somewhat compelling. White collar housing, political unrest, and then bonds. All of these areas got smashed yesterday. So these articles, I was hesitant to even talk about this, but as it did drive the markets yesterday and the market decline, I thought it was prudent and important to include because it is informing our clients of kind of what's going on in the portfolios and how we're thinking about things. So software stocks down 6.5%. The frictional companies, I just use Netflix and Spotify. Netflix was down 3.5%. Spotify was down 4.5% yesterday. Credit cards, American Express was down over 7% yesterday. The exchange rate, the interchange fees, which is that 2.5% fee that the credit card company gets. That's only a third of American Express's business, but they were down 7% yesterday alone. In private credit, Apollo, which acquired Athene, was down 5%. India, the ETF itself was down 1.5%. Infosys, which is the big IT outsourcer, that was down 5%. Toll Brothers, the luxury home builder, was down 2%. And the 10-year bond was down 6 basis points yesterday, Tom, to 4.02%. I've seen articles and fear and these things hit individual stocks many times. I've seen it hit the stock market occasionally. Rarely do I see a narrative like this influence bonds to the extent that it did yesterday.
Yeah. I mean, we have moved back up to a 404. Shout out, A-Town down. For those not local, that is the local area code for the city of Atlanta. I would say the best way to frame it is the future is uncertain. And this is a technology that is rapidly advancing and rapidly changing the environment. But if you look back at other things that did that, they didn't ruin society and put everyone out of work. If anything, they created unbelievable advancements. You know, the cotton gin functionally ended the slave trade. The railroad eventually market corrected the Oregon Trail. You know, the Industrial Revolution made it so we can all have clothes and shoes. You know, and it didn't lead to life being worse. In fact, the number of people in poverty has really, really, really come down over the last 200 years. I mean, the number of people who live in poverty is very low. And you could argue that things like data centers in space powering AI that's connected to your Starlink will probably bring that poverty level down even more. There are going to be some people who are put out of work. You know, there aren't a lot of people whose job is the horse trade anymore because we have cars. There's a number of different. The steamships went out of business because we created airplanes that could go across the Atlantic. I mean, there's a million different examples of technology.
Travel agents have gone out of business because there's the internet.
Yeah, because the internet, kayak.com. But those are going to go out of business because AI will find you the cheapest one. So, I mean, this is the natural progression of life. You know, dinosaurs will die. And honestly, it's pretty good that we don't have dinosaurs walking around because they're very dangerous, is my understanding. I had never seen one. But, I mean, that's the way I would frame it is, yeah, there's going to be some real fear. And I think that, you know, anxiety is worrying about things that haven't come to pass yet. And I don't know that there's really a reason to be very anxious about this. And some of these companies, yes, will go away. Some of these industries will go away. How quickly that happens remains to be seen. How effective these AI bots and large language models are at market correcting them effectively remains to be seen. I mean, Bloomberg could be functionally market corrected. I mean, it costs us $40,000 a year per terminal. We've got 2 of them to get all the information we need on bond trading. I asked some very simple questions of Chat GPT or Gemini the other day and got some pretty good answers on some bond questions I had just by giving it a QSIP, which I thought was pretty interesting because you can't find that information outside of a Bloomberg terminal and you have to pay up for it. And that could that could be efficiency for us where we don't even have to have Bloomberg terminals to find this information. We could just ask Gemini or Grok. So there's a lot of different things that could happen, but we could all get hit by a car tomorrow as well. So there's no sense in, you know, in worrying about what could happen 2 years from now. I mean, we need to watch it as it goes and adjust accordingly. That's my thought.
I also think there's a lot to be said for this idea that the most compelling thing that you've read. I mean, you think about, we've all read legal arguments, and you read the last legal argument, and it makes the most compelling sense, and you agree with it. And then you read the other side, and you're like, well, that one actually seems more compelling. I think Book of Proverbs even talks about that. But my point when you're looking at this is to understand what the central assumptions are and also what they're not talking about. Because you can always poke holes in all of these things. But I don't really want to go ahead and do that about why American Express may actually be a little bit more resilient or these other companies might be resilient. And that's small potatoes. What the big central assumptions are is that data is ubiquitous and free. And I don't know if that's a valid central assumption. I mean, already I was trying to get Chat GPT to basically cartoonify all of our images for a little office kind of tournament that we're doing. And they couldn't access the image. I had to upload them. Because they don't have access to the data. So, you know, it assumes that data is free and ubiquitous. That's number one. The second big assumption is that these agents are not utilities, but they are autonomous and intelligent. And I think there's been a lot of talk that we will get to that point. But I think it's also pretty clear that we're nowhere near that point right now. You know, I've been very impressed with what Claude AI is able to do, or Grok, or some of these, or Gemini. But in terms of its own autonomous intelligence, it really isn't there right yet. I mean, I could easily create something similar without having to be smart, simply by doing some searches and compiling things. And I think so you're assuming that data is free and ubiquitous. You're assuming autonomous and intelligent. And I think those are assumptions that we got to question, and we're going to continue to watch. But it does not mean that you know, the world's going to end in 2 years.
I mean, things are changing. I mean, the example that's going around a lot on Twitter is the Will Smith eating spaghetti. Have you seen that? It was a prompt that someone gave ChatGPT like 2 years ago of give me a video of Will Smith eating spaghetti, and it's very strange to watch. It's disturbing, and it kind of looks like Will Smith, but it's very strange, and the way he's eating the spaghetti is disturbing But now if you do that, you will get a video that's very difficult to discern whether it's real or not of Will Smith eating spaghetti. And that's happened in a very short period of time. And the advancements are going to continue to happen more and more rapidly. You know, so things could change. They could change very quickly. But the thing that strikes me is that NVIDIA continues to sort of languish from a price action standpoint. But all of these companies, if they're going to be on the cutting edge of AI, are going to need to give them money. And yet that stock price continues to kind of get caught up with this, when in reality, they might be the biggest winner. If we're going to destroy trillions of dollars worth of industry, that's got to go somewhere. And if it's all going to AI, then it's all going to NVIDIA, and the price has not changed. So I think that there's some argument to be made that some of these companies are actually oversold in all of this, because there's got to be winners. There has to be. And if there's not, then everything's just going to get more efficient, and the cost of everything is going to go down. At which point prosperity will probably continue to increase. And so that's where you start getting into these circular thought patterns of like, oh, everyone's going to be out of work, but there's going to be so much money, and everyone's going to get everything so cheaply. And, you know, you start being like, they offset each other very quickly, and life might actually be very similar to how it is right now.
I would say the idea of that the article postulates of there will be structurally mass unemployment, and the government solutions are, you know, big checks to people, to displaced workers, or paid for by higher taxes or on AI compute, or the government kind of having a stake in a lot of these AI companies and just paying out the dividends. I think that both of those are incredibly dangerous proposals to make. I mean, if you just think about a government entity nationalizing shares of OpenAI, for instance, and then using that to pay citizens whatever the government thinks that the citizen should get, that is very dangerous. I mean, that's the definition of communism. So I do think that some of the proposals that are being, I think people just got to be careful. They sound great in theory, they sound creative, but we have to understand kind of what the purpose of what we're trying to do is, and kind of what solution, what problems we're trying to solve for.
I would say that only works, is it Luxembourg or is it Liechtenstein, where it's like they've just got so much wealth that nobody pays taxes, and there's like,
it must be Monaco.
There's some small principalities where that works, where everyone is sort of related to each other. There's very little diversity, which people will not care for, and the size, the footprint is extremely small. But other than that, I don't think that there's really opportunities for those kinds of things in the United States. Yep. One, we just have too much debt. You know, if we had a net surplus every year, then by all means we could pay that out as a dividend. But until we get there, which is a very long road to hoe, particularly if you start doing things like striking down tariffs, then, you know, I think that's wishful thinking.
Jamie Dimon was asked about a variety of things yesterday at the JP Morgan Investor Day. But bottom line is JP Morgan sees the economy pretty good right now. I think we have a chart, Jonathan, here about on the right hand side. You can see kind of what they see, and basically consumer credit is doing pretty well. Still some concerns about the housing market and some private credit areas, but in general, things are pretty good. And the year's off to a good start. I would say Jamie Dimon was asked a few questions. The first one that was interesting was he was asked about people, basically private credit, people pushing the envelope to show outsized growth. He says that we saw the same thing in 05 and 06 and 07. The rising tide was lifting all boats, and people were just going to the nth degree, and he said that that's not very wise. He said they're just doing dumb things to create net interest income, or they say that they're winning in the markets business, something like that. And I don't know. Some people might say this is Jamie Dimon's excuse for JP Morgan not outperforming more than they are. I think that he's probably correct. And I think he just errs on the side of conservatism in general. And he's not willing to go to places that, you know, more enterprising banks would do so.
He doesn't have to.
Right.
I mean, they're the biggest monkey on the block. You know, I mean, they've got the fat stack at the table. There's no reason to go all in.
He did make some comments on the Fed as well. He said that I think they're right to talk about more narrow banking. He said that if they're going to reduce the balance sheet, though, they need to adjust the liquidity rules and the leverage rules, because there's no way to reduce the size of the balance sheet because the banks are forced to keep assets on the balance sheet of the Federal Reserve. So he mentioned that, and he also said that the Fed was too big. They lost $1 trillion. They erred by going into DEI, climate and social policy. And I think he connects it pretty well here. He says, while the Fed was focused on DEI, climate, and social policy, Silicon Valley Bank and First Republic were going down, and they lost $1 trillion. I mean, the cost, and I've never seen it framed that way. That's probably the most harsh words by saying about the cost of focusing on these other areas. I mean, they were so focused on DEI, climate, and social policy that they lost $1 trillion and let two of the biggest banks in the United States go bankrupt.
I mean, Kurt Cignetti's not worried about the cheerleaders' uniforms, and that's why they win football games. You know, because that's the goal. The goal is to win football games. For the Fed, the goal is for banks not to fail, to have inflation stay modulated at a reasonable rate and to keep employment. And they didn't do 2 out of 3 of their most important goals in lieu of doing a lot of other dumb stuff. Or, you know, you can call it dumb, you can call it, but it's not the focus. Football teams don't play badminton, you know, but that's what they were doing. They're really trying to be the best badminton players on the planet, and they lost the football game. And I think
they were focused on their distance running.
Yeah, exactly.
That's what they were. But we have the best distance runners in football.
Yeah, we're all really fast. It's like, all right, well, your offensive line weighs 180 pounds, and that's not how you win football games. And that's what we need to think about with the Fed. And you can't do everything. You either do the things you're supposed to do really well, or don't do them at all. You know, find somebody else to do it. And we've talked about that a million times on this podcast. That just the mission creep got to the point where they weren't doing a good job of doing anything.
Yep. State of the Union tonight. It'll be interesting to see if Trump talks about the Fed, throws Powell under the bus one last time. We're also going to see some new measures to reduce costs. There's potential for an alternative to a 401k for people who don't have employer-sponsored plans. And he's also going to highlight his ratepayer protection pledges. So basically, as tech companies are building out all these data centers, they're going to have to pay their own way and produce their own energy. So are there any other things, Tom, that you think would be market moving that Trump may propose tonight?
I don't know. I still struggle to see a war with Iran. That seems to be the big thing going on right now. I'd be interested to see what comments are made there. How much he goes off script, I think, is important. I think that if he stays on message and reads off the teleprompter, I think things will be a little bit smoother, but he's not known to do that for very long. We'll just see. I don't know why it has to start at 9 o'clock, though. You know, I suppose it's for the West Coast, but they're not going to watch it.
Yeah.
So that's, you know, for the people who have kids and the people who do work in finance, which is the East Coast primarily. Let's get this thing going early.
I do wonder if it's time for after the kids go to bed intentionally, because let's not expose the kids to all this.
I don't know. I don't know. They've been walking out of their schools to protest ICE, so you think they'll probably be staying up to throw things at their television.
That's a great point. We do have some company news. Meta signing a $100 billion deal with AMD. That's massive, obviously. It's contingent, and it's going to be staged. And Meta will get 160 million shares of the stock, assuming they follow through with this. AMD's up 9% on the news. They're going to get diluted by 10% with this deal, but getting $100 billion of sales, I guess, is nice. NVIDIA's down a little less than 1%. It comes as OpenAI is actually reducing its spending target to $660 billion by 2030. So I think that people are starting to realize profitability is important in this business. And I wouldn't be surprised to see Meta not follow through with the entirety of the $100 billion. $100 billion is just kind of a big round number.
A lot of people are saying that profitability is good in all business.
Yes. but it hasn't. But for whatever reason, in AI, the more money you spend had been the idea. Then a couple other things. Novo Nordisk is cutting its price by 50% for weight loss drugs. It's still going to be higher than the cash price. Lilly's down as a result. But I just don't think that's going to be meaningful. Again, Lilly's drugs are going to be covered by Medicare in the middle of this year. So that'll be another boost for them. It comes a day after Novo's own study showed inferiority against Lilly's drugs. Talk about embarrassing. You run your own study to show that you guys aren't worse than your competitor, and then you're like, we cannot claim non-inferiority. That's how it was phrased. And then Hims is down below $15. It was over 50 just a few months ago. They just didn't have really any answers to the GLP-1 franchise, and their guidance came in a little bit under expectations. Home Depot reported earnings as well. They still see a frozen housing market. They said maybe it's improved slightly, but still pretty bad. People are just very uncertain. And so Home Depot is uncertain. They reiterated their guidance for the full year, 2.5% to 4.5% revenue growth, 0 to 2% comp growth. Not great, but again, we kind of knew what it was going to be. They provided guidance just in December. So nothing really big to touch on there, but I just wanted to give those updates. We also want to give a quick update, Tom, and I'll pass the baton to you here on Jacob's Ladder. I think we're seeing more and more views of that YouTube video, that interview that we sent. I would say, just kind of from my point of view, I would love, and this is, I'm not saying this in a self-serving way, I would love to get that over 1,000 views. So share it to anyone who you think is interested. I think at the very least it's an interesting perspective that people would find edifying from a knowledge base. And if it lands Amy a connection or it lands her a $5 donation, you're really impacting kids in the local community, and I think that's important. But Tom, I'll hand it over to you to close out.
I would just say, first of all, I think Friday was our biggest day for downloads for the whole year, so I appreciate everybody checking that out and listening to it. But again, we're going to be hosting a lunch and learn on the 1st of April, having Amy in the office. I would encourage you to show up, bring a friend, learn a little bit about how they're working in neuroplasticity and trying to help a lot of these kids who've kind of been left by the wayside. And let me know if you'd like to attend. We're going to be sending out, I think, a formal invite here sometime in the next couple weeks, just so we have a head count, so we can order up some delicious food for everybody. But let me know if you have questions. Please, share, subscribe, like, send it around. We'd love to get that into the algorithm so people can see it.
Eyeballs are so important, as everyone knows on this platform. So I appreciate you. Thank you for all of your support, and we'll see you tomorrow. Bye.